Right. What's the futures market telling you about oil prices? Are you seeing backwardation or contango? Like, is there any indication what the futures market is, telling you, and how are traders pricing that in today?
Yep. I think across crude and products, we are seeing very strong backwardation
Hmm.
in all the swaps.
Wow.
So it's
Okay.
clear it is a tight market.
And you spoke about IEA. Just on that point, if the war continues, right, and prices edge higher, do you think the IEA will release another batch into the market? I believe the last release was sometime in the month of March, right?
That's right. They at that point of time they announced the 400 million barrels. We have not
Hmm.
finished that allocation yet as well.
Hmm.
But I think the with flat price very getting stronger, it should be a trigger point for the second release of SPR, of which there is still inventory to be released. I mean, Japan and Korea definitely has a lot more to spare. US still has, although we heard that the cavens are getting a bit more dangerous side on the SPR levels. But yeah, no, Japan and Korea, you still can pull if IEA says go ahead, which I think it should be the base case now if oil price keeps to be above the $95 per barrel number.
Understood. So just to segue for a second, in recent memory, this isn't the first time the oil market has gone through some very material shocks, right? You have the current ongoing war. You had the 12-day Israel-Iran war in 2025, Russia-Ukraine, and of course, how can you forget COVID? When you bring all of this together and just zoom out, so much has happened in the 2020s. So my question is, is volatility essentially the new normal now for energy markets?
It seems to be. I
Mm,
think you rightly mentioned it. You have the lows of COVID. Nobody wants oil. There's no transport demand. To the current highs of supply shortfall because of the war.
mm,
And refining as well. We don't have enough refining capacity right now because Russia is getting hit. We didn't build enough refineries in the last 2 3 years, except for yeah, India had a couple, and in China as well. But rest of the world are fairly short refining capacity. So the volatility that we are going to see is even more because the infrastructure that we have in oil is not catching up with uh, demand, although many will argue that demand is coming out, so we don't need that much oil. But I think as the population grows, we're still seeing that there is a need for oil, and until there is a really strong replacement happening, like now, the volatility in the current period will persist.
right. So you're based in Singapore. Singapore is a very prominent trading hub. Um, when you speak to your customers, right, what are their top two, three concerns that they talk to you about? Have those concerns changed? Pre ceasefire versus post ceasefire.
I think it's been there all the while because once we know that Strait of Hormuz 1.0 closure has happened,
Mm,
2.0 can happen again.
mm,
Even though the ceasefire was in place, everyone was much more aware that something can be replicated very quickly, in terms of blocking, i.e., you don't really need to mine the straits, you just need to have the thought of mining the straits and you have shipping activity halted. And Asia is very much exposed to the oil from the Strait of Hormuz.
right.
We import, the Japan used to be 90% of Middle East crude goes into Japan as a feedstock, and many other parts of Asia are probably like the between the 60 to 80% number. So in that period of from March to where we are today, there has been a lot of diversification. So the theme of how do I diversify out of a full dependency upon the Middle East crude, which is cheaper, but it is a high risk, is now first and foremost in many of my counterparties in the trading world here, in refineries and traders in Singapore. And then second thing is about stockpiles and strategic petroleum reserves in general. How do you balance the need, right? Because from a trading perspective, if the market is backwardated, which has been quite the case for many, many years, there is no incentive to store. At the
Yeah.
same time, governments are not willing to previously to put in money to invest for this storage. Now I think the whole pre-ceasefire period, a few countries have now stepped up to say we need to do something different now, right? We have Australia, New Zealand setting aside more budget for petroleum storage elsewhere. ASEAN Pact is as well coming out, and of course India. I think in India there was only 9 days of SPR available, and now there's more discussion.
If you like this video, then like, share and subscribe to ET Now.